Dividend is a share of profits and retained earnings that a company pays out to its shareholders. When a company generates profit and accumulates retained earnings, those earnings can be either reinvested into the business or paid out to shareholders as dividend. It is basically a gesture of gratitude towards the shareholders for being invested in the company. The annual dividend per share divided by the share price is called the dividend yield. The process while giving out dividends is the company generates profit and retained earnings. The management term decides some excess profit should be paid out to shareholders instead of being reinvested into the business. The board approves the planned dividend and the company finally announces the dividend, the value per share, date when it will be paid, the record date, etc. And finally, the dividend is paid out to shareholders. And similarly, the concept of stock split is an event that increases the number of shares outstanding and reduces the par or stated value per share. For example, a 2:1 stock split would double the number of shares outstanding and half the par value per share. As existing shareholders would see their shareholdings double in quantity, but there would be no change in the proportional ownership represented by the shares, as the market capitalization remains the same after a stock split. Stock split is an event basically done to make sure that the price of stock remains in the accessible trading range and it doesn't get too expensive for the retail investors so that regular trading can be pursued in this stock.